Good afternoon, everyone. This is Wizzy. So let's begin today's webinar. And as you can see on the topic, which is there on the webinar, is basic, the importance of stop loss. I believe that I picked this topic because I picked this topic because I was talking about I talked about it a little bit last week because Alex said that ask question about stop loss. So I just deemed it feel that okay, since someone asked question about the stop loss or so, it would be very much important for me this week to just emphasize and give a case study in terms of the importance of stop loss. Take profit is still very important, but first thing first is the stop loss. You need to know why anytime you place a buy or a sell on the trade, you need to know the reason why you are doing that. You need to know the reason behind the reason behind taking a trade. You need to know how much you are willing to lose in that particular trade, and you need to know how much you want to win in that particular trade. It is very important, but you knowing how much you want to lose gives you a rest of mind. So let me dive more in details. If there's any question, feel free to ask and I will answer your question as we move forward. So just imagine, let's put for instance, let's just forget about trading. Let's go to kind of real business. If you want to start maybe a coffee business, what do you need to do first? You need to write down your plan. You need to write down your plan, your business plan. If you want to go into maybe coffee business or any business, you need to write down your business plan. And in business plan, what is the most important aspect of business plan is the financial aspect of a business plan. So you write down your business plan, you write down the financial aspect of your business plan, the expenditures and the potential incomes. That is cash flow on balance sheet, the cash flow. So when you finish writing it, what you need to do first? You need to say, okay, you know what? I need $5,000 or 5,000 euros to start this business. That is mostly what you put in back of your mind. Okay, I need 5,000 euros to start this business. At the end of the day, you already budgeted that money, 5,000 or 6,000 euros. So for a good business plan, when you budget 5,000, you need to at least make it 10% or 15% more than what you budgeted. Because why? Because as when you go more deep in establishing the business, you always find out that what you put in the price is more expensive. So that's why you need to make the business plan or the financial aspect at least 15 or 10% more costly than what you wrote down on your business plan. So let's forget about that aspect. So you have a $5,000 to $6,000 and you say you want to use it to open your coffee shop, right? That is the money which you budgeted in opening that coffee shop, $5,000 to $6,000. So when you finish opening the coffee shop, what do? You said, okay, you need money to start running this coffee shop until you start making profit. So you budget other 5,000. That's okay. I need 5,000 to start running this coffee shop until I started making profit. So your total cost then is what? 10,000, right? Correct. So minus the initial capital of you starting the business. Let's go to that your other 5,000 for you running the coffee shop. That is the risk which you plan. That this is the money which you plan to or use to run the business before you start making profit. Then you put your budget. When will I start making profit in this coffee shop? 1 month, 2 months, 3 months, 4 months, 5 months, 6 months, whatever you put in your paper or in your plan. That is when you think you will start being in a break even and start making profit. Let me put it like this. You said, okay, after 6 months, I need to be on break even. I need to stop spending the 5,000 if there's still any left. I will need to start making money to run the business, not the initial money which I deposited. Is that correct? That is absolutely correct. So when after 6 months you already run the coffee business is not moving the way you planned, and you already burn your 5,000. What is the 5,000 which you used to run the business? What do you need to do? You need to evaluate yourself. Is it plausible for me to move forward and go borrow money, continue to run this business, or should I just scrap everything and re-strategize? That's the question which you need to start asking yourself after you already exhausted all your money, which you propose that in 6 months time you need to start making money, and that the risk, that is 5,000 which you need to use to run the business. That is how it is. So let's go back to trading. It's still the same thing like trading. So I come to this chart right now. You can see this is trading view. I just put it on trading view because I want to show you, and you see it's kind of a replay. So just kind of stimulation, yeah, stimulator. That's what I do right now, because this was August 20, so I already knew what happens in this currency pair. So I want to make this as an example. I already knew what happened because today is kind of 11th of August and this is on the 20th, so it's the replay the replay trading view. So it's kind of a stimulator. So let's put it like this. You have $1,000, right? Let me put it, you have more or less $1,000 on your bank account. So you have $1,000 balance on your trading account. This is your balance. So you come to this chart. I will give you example of A and I will give you example of B. A trader and B trader. I will give you both example. So I'll give you both example on A trader and I'll give you both example on B trader. So let me go on the A trader. So on the A trader is the one that doesn't have that does not put stop loss. He doesn't use stop loss. He always like take a buy or take a sell and leave it. He doesn't use stop loss, doesn't use take profit. He just leave it the way it is, and he feels that the price will go exactly the way he plans, right? So this trader A has 1,000. So it's going to be trader A and trader B, right? I will be monitoring this euro JPY, because you can see I already like kind of monitor it. I did focus, so I want to see how the focus plays out. So that's what you're looking at right now, that I'm kind of mostly looking at. So bear with me on that. So let's move forward. So trader A and trader B, right? So trader A is the trader that usually don't use stop loss, and trader B is the trader that most times when he takes a trade, he always puts his or her stop loss. So this is kind of, both of them has 1,000, right? $1,000. So I put, let me just do it the same analysis which I always do every time. Price action. I'm not using indicators, so let's put price action. So both trader A said, you know what, trader A saw a downtrend on the 4 hours that is already making higher highs and higher lows, and when he went to 4 hours, he can see that it's kind of a decline break structure, and the price recently broke the most recent structure, which I will put here. Yeah, broke the support level. And he is looking at, okay, you know what, the price breaks support level and the price is approaching the next support. What I will do, once this price break this support, I will take a buy or take a sell. That is what a trader A said. So what happened? So trader A said that, you know, once this price breaks support, I will take a sell. So I would put on candle further. Okay, trader A said, okay, this price already broke support. What I want to do, I want to take a sell. So the trader A take a sell at this after this close. Yeah, take a short after this close, and maybe he's targeting this zone. He said, oh, after he broke this zone, this other zone is kind of a clean move to the downside. So he's targeting more or less 300 pips. Let me put it here, 300 pips. That he's targeting 300 pips and take stop loss. He said, I don't usually use stop loss. It will always get to that position which I want to, which I'm planning that the price will go, because there is clean traffic to the left. The price will definitely go and hit that region. That is what the trader what's it called, the trader Hayes said. So what happened, he took a position and he has $1,000. So let me put it like this, the lot size which he used, let me just put it, both of them use, this is random, so don't get me wrong. So he used 0.50 lot size, so bracket €5 per lot, $5 per lot. So let me put it, $5. Both of them, they have the same. So trader A said, okay, I already took a buy from this after the price broke. Maybe he has set stop or so. Sorry, sell. He has set stop. He already took a sell. He usually don't use stop loss. He said, I don't like stop loss because I always believe in my analysis. All banks always know where I put my stop loss. Once what will happen, immediately the price get there, the banks will just reverse and hit me hard and continue moving to the direction which I said it will go. That reason I'm not using stop loss, because if the price is going down, it will always continue moving down, it will not go up anymore. That is what trader A said. Trader B, I will come to that. So let's take, okay, trader B said that, you know what, I want to sell the same once this price break this support level, and I want to target 300 pips. That is what he said he wants to target. And the trader, let me put it again, trader A, okay, and trader B, I will put it again so that we have the same. Immediately I will not start moving one after the other, so we go the same. Both of them, they are targeting 300 pips, right? And trader B said that, you know what, since I'm targeting 300 pips, his risk and reward ratio is more or less 1 to 2 or so. Let's put his stop loss is, okay, let me put his stop loss is €100, 100 pips. That is more or less $500. So because it's kind of 0.5 lots, and per pips is 5, and if you multiplied it, I'm not kind of if 5 multiplied by 100, yeah, 500, because I am not great at math, but I still know that particular aspect. So let's continue. So this is trader B and this is trader A. So both of them, their target is 300 pips. One does not use stop loss, and the other one has 100 pips stop loss because he's aiming at 300 pips take profit, which is very good. So what happens? Let's do this trading view replay. Let's put it like this. So both of them are both of them, they are in profits right now. Let me go further. Yeah, both of them, as you can see, both of them, both A and B, they are in drawdown. They are in drawdown, and I will tell you this: I'm not doing any technical analysis. I'm just giving you an example because I already knows what happens. This was August 26. I already knows what happens. This is a stimulator. So let's move forward. Both of them are in drawdown. One, I believe, is already in drawdown, more or less. Let's calculate it. Yeah, 36 pips. Both of them are in drawdown of 36 pip, and they are still in the trade because A said that, you know what, I don't use stop loss. The price is going, it must go down. It just needs to make a pullback to the upside before it continue moving forward. And B said that the price will definitely go down, but still I need to protect my account, so I have 100 pip stop loss. Both of them has $1,000 balance in their account. So let's move further. Boom! What happened? Look, at this point, trader B already left the trade, and trader B took a loss. Trader B took a loss of $500. So trader B said, oh, this trade did not work the way I planned. I will plan another day. So what is happening right now? This is already 100 pips. Because trader A does not have a stop loss, he's still hoping that the price will come down. So he's leaving his trade the way it is. He did not close his trade. He believed that the price will come down. It's just 100 pips, it will come down. I'm aiming for 300 pips. He don't want to leave. But right now, trader B already said, okay, enough is enough. I already have $500 loss. My balance is $500. Next time, I might take a trade that will work in my favor. So trader B protect his account. After 50%, he protects his other 50% for next trade. But trader A said, no, I want to move further. So what happened? Let's continue moving. Trader A might be lucky, but looks like the trade is not working for trader A at this point in time because the trade already makes a new high. And let's look how much trader A has right now in his balance. 200 pips. You understand? Right now, trader A already blowed his account because he did not put stop loss. But if you look at trader B still has $500. Trader B still have $500 in his bank account or in balance because he lost 500. He has 500 left in his on his balance. So he said, okay, you know what, everything is fine. So you see the reason why. Let's even continue with this stuff if it will go down. You see the reason why you always need to use stop loss. So the price makes a move to the upside and 200 pips, and there's someone that don't have that usually don't use stop loss. He or she will have more loose trade, or he or she will blow he or her account fast than the person that usually puts stop loss. Because why do you usually put stop loss? To protect your account. Because no trader, I will tell you, no trader that will tell you I am 100% profitable. It's not possible that anytime I take trade, I am 100% profitable in the trade when I take a trade. It is not possible. There's always a winning, there's always a losing trade. So that is the reason why you need to have it at the back of your mind that there's always going to be a losing trade. So in order for you to protect the balance which you have on your account, you need to know how much you want to lose before taking a trade. Even when you are a pro, even when you are the most like wizard in Forex, you don't have 100% winning ratio. You always have more, I would say 60, 70, 80%. The one that is very good at 80%, but 60, 70%. That's what the best usually have. So that's the reason why you need to have stop loss while taking a trade. Whether up or down, you need to plan your risk before taking a position. It is very important. It is very important to have your risk. Don't think that the banks or the big institution, they know where your stop loss is, they will just take you. No. Sometimes when you see all this week up and down, it's kind of liquidity grab. When you see the weeks up, weeks down, blah blah blah, it's to grab liquidity and to continue moving. That is the reason why. Just imagine. Okay, let me cancel both of them right now. I cancel both of them. So just imagine that I want to take a trade right now. I will not start entering a trade. Maybe I want to sell. I don't want to start selling when this stop loss was supposed to be at this place or this place. But compared to the balance which you have might be too much. So you need to wait for a structure. So like this, you can say, okay, you know what? Right now, I might sell in order for me to put stop loss here and take profit somewhere. But you need to look somewhere the support is still there. So you need to have a leverage at your side before taking a trade. After you have the leverage on your side before taking a trade, you need to know how much you want to lose. You want to lose 10 pips, 20 pips, 30 pips, or 1%, 2%, 3% in percentage. You need to know how much you want to lose before taking a particular trade, because in the long run, you will be profitable when you know how to manage your risk. This is the magic word in trading. When you know how to manage your risk, in the long run, you will 100% be profitable. Because the technical analysis, the focus and something like that will come in place as the time goes on, as you become more experienced, as you continue looking particular charts. Maybe you have 5 currency pair you wish you always look at and you always trade. As the time goes on, you will get used to those charts. But before you start getting used to the chart 100%, you're already saving your money before you blow your account. 1 account has been blown, 2 account has been blown, 3 account has been blown. So you always need to manage your risk. That is how you become profitable. So guys, this is what's it called, the technical analysis, the importance of stop loss. And if you have any question, feel free to ask. But I believe that in the absence of no other question, you can put a comment. If you want me to take a look or something you want me to talk about, let me know and I will talk about it next week. But in them, remain blessed and see you next week.